Based on the historical data and forecast, Bitcoin has shown considerable volatility with a recent downtrend followed by a potential rebound. The RSI has fluctuated, dipping below 40, indicating oversold conditions, and then recovering. The Bollinger Bands show the price has been testing the lower band, suggesting potential for a bounce. The support price is consistently around $109,100, while the resistance is at $114,200. Considering these factors, I propose a strategy combining RSI, Bollinger Bands, and support/resistance levels. My recommended strategy is to initiate a long position when the RSI falls below 30 and the price touches the lower Bollinger Band, aiming for a high return opportunity. Specifically, enter a long position at $109,100, coinciding with the support level and lower Bollinger Band. Set a stop loss at $108,800, just below the lower Bollinger Band, to limit potential losses. The initial target price is $114,000, near the middle of the Bollinger Bands and just below the resistance level. If the price breaks through the resistance, a secondary target price of $115,200 can be considered, based on the forecast data. This combined approach leverages both momentum and volatility indicators for a balanced and potentially profitable investment. Based on the historical data and forecast, Ethereum has shown a downtrend from September 17, 2025, to September 30, 2025, with a recent bounce. The RSI indicates oversold conditions during this period, particularly around September 29, 2025, with a reading of 38.8. The Bollinger Bands also suggest a potential reversal, as the price has approached the lower band. Considering the forecast for the next week, the price is expected to fluctuate between $39.70 and $41.20. Therefore, I propose a long entry at $4,020, placing a stop loss at $3,970 to protect against a potential downside reversal. The initial target price is set at $4,080, aligning with the forecast high for October 4, 2025. To refine this strategy, I will incorporate RSI and Bollinger Band signals. When the RSI falls below 20, indicating an oversold condition, we will enter a long position. Conversely, when the RSI exceeds 80, suggesting an overbought scenario, we will consider a short position. The Bollinger Bands will serve as dynamic support and resistance levels. If the price touches the lower band, it indicates potential support, and if it touches the upper band, it signals possible resistance. Combining these indicators, if the RSI is below 20 and the price is near the lower Bollinger Band, we will enter a long position at $3,970, with a stop loss at $3,950 and a target price of $4,060. This combined strategy offers a more robust approach to capitalizing on Ethereum's price movements. Based on the historical data and forecast, XRP shows a fluctuating trend with support at $2.75 and resistance at $2.99. The RSI indicates periods of oversold and overbought conditions, with values ranging from 38.4 to 57.4. The Bollinger Bands suggest potential price volatility, with the price frequently touching the upper and lower bands. Considering these factors, I recommend a combined strategy utilizing RSI and Bollinger Bands to capitalize on short-term price movements. My proposed strategy involves a long position when the RSI falls below 40 and the price touches the lower Bollinger Band. Specifically, enter a long position at $2.81, setting a stop loss at $2.75 to mitigate potential losses. The initial target price is $2.88, aligning with the recent resistance level. If the price reaches $2.88, consider moving the stop loss to break even to protect profits. A secondary target price is $2.93, based on the previous resistance level. This combined approach leverages both momentum and volatility indicators to optimize potential returns while managing risk effectively. Based on the historical data and forecast, BNB shows a generally upward trend with periods of consolidation. The RSI fluctuates between 51.8 and 81.2, indicating both oversold and overbought conditions. The Bollinger Bands have widened recently, suggesting increased volatility and potential for price swings. Given the forecast for October 1st to 7th, which predicts prices around $1,000 to $1,020, I recommend a long position strategy. Specifically, enter a long position at $1,000. Set a stop loss at $970 to protect against a potential downside reversal. Target a price of $1,030, aligning with the recent resistance level. To refine this strategy, we'll incorporate the RSI and Bollinger Bands. When the RSI falls below 30, consider entering a long position. When the RSI reaches 70 or above, consider taking profits or tightening stop loss. If the price touches the lower Bollinger Band, it signals a potential buying opportunity. If the price breaks above the upper Bollinger Band, it suggests a continuation of the uptrend. Combining these indicators, I recommend entering a long position at $1,000, setting a stop loss at $980 and targeting $1,030. This blended approach leverages both momentum and volatility indicators for a more robust investment decision. Based on the historical data and forecast, Solana shows a downtrend with recent price fluctuations. The RSI consistently dipped below 50, reaching as low as 35.6, indicating oversold conditions. The forecast for the next week predicts a continued downward trend, hovering around $205 to $212. Combining this with the support price of $193, a conservative strategy would be to initiate a long position when the price bounces off the support level. I recommend entering a long position at $205. Place a stop-loss order at $193, just below the support level, to limit potential losses. A reasonable target price would be $212, near the recent resistance and forecast high, providing a potential profit of $7. To enhance returns, I propose a secondary strategy based on the Bollinger Bands. The price has been trading within the bands, suggesting sideways movement. When the price touches the lower band, it signals a potential buying opportunity. However, given the overall downtrend, I suggest a smaller position size for this strategy. Entering a long position at $205 with a stop loss at $195 and a target at $210 is advisable. Combining both strategies, the primary long position at $205 with a $7 profit target and the secondary, smaller long position at $205 with a $5 profit target, creates a balanced portfolio to capitalize on potential rebounds while mitigating risk. Based on the historical data and forecast, Dogecoin shows a decreasing trend, with the price fluctuating between the support of $0.221 and the resistance of $0.237. The RSI has been oscillating, indicating periods of both overbought and oversold conditions, but recently trending below 60, suggesting a weakening momentum. The Bollinger Bands have been widening, indicating increased volatility, and the price has been nearing the lower band for several days, suggesting a potential downward movement. Therefore, I recommend a short position strategy. We will enter a short position at $0.233 with a stop loss set at $0.237, just above the resistance level. The initial target price will be $0.221, the support level, aiming for a quick profit. To refine the strategy, we will incorporate RSI and Bollinger Band signals. If the price touches the lower Bollinger Band and the RSI falls below 30, we will adjust the target price to $0.204, capitalizing on the potential for a deeper decline. Conversely, if the price approaches the upper Bollinger Band and the RSI exceeds 70, we will immediately exit the short position to minimize potential losses. This dynamic approach, combining trend analysis, support and resistance levels, and technical indicators, will allow us to maximize returns while managing risk effectively. Based on the historical data and forecast, TRON shows a slight downward trend with price predictions consistently below the recent close. The RSI consistently fluctuates between 42 and 57, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show that the price has been trading within the bands, with the lower band consistently around $0.33 and the upper band around $0.35. Given the downward trend and the current RSI level, I recommend a short position. The entry price should be $0.333, with a stop-loss placed just above the upper Bollinger Band at $0.354 to limit potential losses if the price unexpectedly reverses. The target price should be set at the support level of $0.332, aiming for a conservative profit. To enhance the strategy, we can incorporate a dynamic adjustment based on the RSI. If the RSI falls below 30, indicating a strong oversold condition, we should consider exiting the short position and potentially going long. Conversely, if the RSI rises above 70, suggesting an overbought condition, we should reevaluate the short position and consider tightening the stop loss. This combined approach, integrating the Bollinger Bands for price action and the RSI for momentum, offers a balanced strategy to capitalize on the current downward trend while mitigating risk and adapting to changing market conditions. This portfolio will be the most efficient. Based on the historical data and forecast, Wrapped Beacon ETH shows a downtrend from September 17 to September 30, 2025, with a significant drop in price. The RSI consistently falls below 50, indicating weakening momentum, and dips below the oversold level of 20 on several days. The forecast for the next week projects a continued downward trend, with prices fluctuating between $43.40 and $42.90. Considering the support price of $4,190 and the recent price action, a short position is warranted. We will enter a short position at $4,440, placing a stop-loss order at $4,460 to protect against a potential reversal. The initial target price will be $4,300, aiming to capitalize on the predicted downward movement. To refine the strategy, we'll incorporate the Bollinger Bands. When the price touches the upper band, it suggests a potential pullback. The current forecast shows the price near the lower band, reinforcing the short bias. If the price reaches $4,290, we will adjust the target price to $4,340. This combined RSI and Bollinger Bands approach provides a dynamic strategy that adapts to changing market conditions. The overall portfolio will prioritize the short position with a focus on managing risk through strategic stop-loss placement and adjusting targets based on technical indicators. Based on the historical data and forecast, Chainlink has shown a downtrend from September 17, 2025, to September 30, 2025, with support at $20.2 and resistance at $21.5. The RSI has consistently fallen below 50, indicating weakening momentum, and recently dipped below 35, signaling an oversold condition. The forecast for the next week projects a continued sideways movement around $21.3 to $21.5. Considering this, I propose a long position strategy when the RSI rebounds above 40, targeting a price of $21.5 with a stop loss at $20.2. This strategy aims to capitalize on a potential bounce from the support level, but with a tight stop loss to limit potential losses if the downtrend continues. To refine this strategy, I will incorporate the Bollinger Bands. When the price touches the lower band, around $20.2, it suggests a potential buying opportunity, aligning with the oversold RSI. Entry price will be $21 when the RSI is above 40 and the price is near the lower Bollinger Band. The stop loss will be set at $20.2, just below the support and lower band. The target price will be $21.5, the resistance level and the upper band. This combined strategy leverages both momentum and volatility indicators for a more robust approach, balancing risk and reward for potentially high returns. Based on the historical data and forecast, Avalanche shows a downtrend from September 17, 2025, to September 30, 2025, with the RSI fluctuating between 47.1 and 79.7. The recent RSI values indicate a slightly oversold condition, particularly on September 30, 2025, at 52.2. Considering the forecast for the next week, the price is expected to remain around 31.7 to 32.1. Near the support level of 28.6. Therefore, I recommend a cautious long position with an entry price of $31.4. The stop loss should be set at $28.6, right at the support level, to limit potential losses. The initial target price is $35.2, based on the recent resistance level. To refine this strategy, we'll incorporate the Bollinger Bands. When the price touches the lower band, it signals a potential oversold condition, aligning with our RSI readings. Given the forecast and the current price near the middle of the Bollinger Bands, a long position is justified. If the price breaks above the upper band, which is currently $35.2, it signals a potential for further gains, and we can adjust the target price accordingly. This combined RSI and Bollinger Band strategy offers a balance between capitalizing on potential rebounds and mitigating risk with a clearly defined stop-loss. Based on the historical data and forecast, Algorand demonstrates a clear downtrend. The price has consistently traded near the support level of $0.203, and the forecast predicts further decline, reaching as low as $0.197. The RSI consistently remains below 50, often dipping into oversold territory below 30, indicating strong selling pressure. Considering the Bollinger Bands, the price is approaching the lower band, further confirming a bearish outlook. Therefore, I recommend a short selling strategy. My strategy involves entering a short position at $0.208. Given the strong downtrend and proximity to the support level, a stop loss should be set slightly above the resistance at $0.226 to protect against a potential rebound. The initial target price is $0.197, aligning with the forecast low. If the price reaches $0.197, we can consider adjusting the stop loss to break even and setting a new target price at $0.187, capitalizing on further potential declines. This strategy combines technical indicators and forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, TRON shows a downtrend. The price has been fluctuating within a range between $2.66 and $2.75, with recent dips below the support level of $2.66. The RSI consistently dips below 30, indicating oversold conditions. The forecast for the next week projects a continued downward trend, with prices potentially reaching $2.58. Considering these factors, I recommend a contrarian strategy aiming to capitalize on potential short-term rebounds while managing downside risk. My proposed strategy involves a phased approach. First, initiate a long position at $2.65 when the RSI is below 20. Set a stop-loss order at $2.54, just below the recent bottom of the Bollinger Bands, to limit potential losses. The initial target price is $2.71, near the recent resistance level. If the price reaches $2.71, consider taking partial profits and moving the stop-loss to break even. A second target price is $2.75, the resistance level. If the price fails to reach $2.71 and continues to decline, close the position at the stop-loss of $2.54. This strategy combines RSI signals with Bollinger Band support to identify potential entry and exit points, aiming for a balance between risk and reward. Based on the historical data and forecast, PAX Gold shows a strong upward trend. The RSI consistently remains above 70, indicating overbought conditions but without significant pullback. The forecast for the next week projects continued upward momentum, reaching $4,010. Considering the RSI and Bollinger Bands, I recommend a long position strategy. The entry price should be $3,860, coinciding with the forecast price on October 1, 2025. Set a stop-loss at $3,820, slightly below the bottom of the Bollinger Bands on September 30, 2025, to protect against a potential pullback. The initial target price should be $3,940, aligning with the forecast price on October 5, 2025. To maximize potential returns, I suggest a dynamic target price adjustment. Once the price reaches $3,940, move the stop-loss to break even at $3,860. Subsequently, adjust the target price to $4,010, based on the forecast for October 7, 2025. This approach allows us to capture substantial gains while mitigating risk. This strategy combines the strengths of RSI, Bollinger Bands, and forecast data to create a high-probability trading opportunity. The overall portfolio is heavily weighted towards this long position, as the upward trend and positive forecast strongly support its potential for high returns. Based on the historical data and forecast, Curve DAO has shown a downtrend from September 17, 2025, to September 30, 2025, with a recent bounce off the support price of $0.636. The RSI has been oscillating below 50, indicating weakening momentum, and the forecast for the next week suggests a continuation of this downward trend, hovering around $0.681 to $0.642. Considering the Bollinger Bands, the price has been approaching the lower band, suggesting potential for a rebound, but the overall trend remains bearish. Therefore, I recommend a short selling strategy with a conservative approach. The entry price for this short position will be $0.681, capitalizing on the initial forecast dip. The stop loss will be set at $0.672 to protect against a potential false breakout or unexpected upward movement. The target price is $0.642, aligning with the lowest point in the forecast range. This strategy utilizes a combination of forecast data and Bollinger Bands to identify a short-term downward opportunity while managing risk with a tight stop loss. The RSI readings below 50 further support the bearish outlook, reinforcing the rationale for this short position. Based on the historical data and forecast, Arbitrum exhibits a clear downtrend. The price has been consistently declining from September 17, 2025, to September 30, 2025, and the forecast for the next week indicates continued downward pressure, potentially reaching a low of $0.388. The RSI consistently remains below 50, with dips below 37, suggesting the asset is oversold. Combining this with the Bollinger Bands, where the price is frequently trading near the lower band, reinforces a bearish outlook. Therefore, I recommend a short selling strategy. Entry price should be set at $0.421, with a stop loss placed at $0.435, just above the upper Bollinger Band to mitigate potential false breakouts. The initial target price is $0.39, aligning with the forecast low and the support level. To maximize returns and manage risk, I propose a tiered approach. If the price reaches the initial target of $0.39, we'll secure partial profits and move the stop loss to the entry price of $0.421, locking in a risk-free profit. Subsequently, we'll adjust the target price to $0.388, coinciding with the forecast low. This strategy leverages the confirmed downtrend, oversold RSI readings, and Bollinger Bands to create a high-probability short position with clearly defined entry, stop loss, and target levels. The combination of the RSI and Bollinger Bands provides a robust framework for identifying potential reversal points and optimizing profit-taking opportunities. Based on the historical data and forecast, JasmyCoin shows a downtrend with consistent support around $0.0119. The RSI has been fluctuating but generally below 50, indicating a weakening momentum. The Bollinger Bands have been contracting, suggesting decreasing volatility. Considering these factors, I recommend a contrarian strategy focusing on potential rebounds from the support level. Specifically, I suggest entering a long position at $0.0118, coinciding with a touch of the lower Bollinger Band and approaching the established support price. Set a stop loss at $0.0113, just below the recent low of the Bollinger Band, to limit potential losses. Aim for a target price of $0.0125, aligning with the resistance level and a reasonable profit margin. To refine this strategy, we incorporate a layered approach. Initially, allocate 40% of your capital to the primary long position as described above. Then, if the price reaches $0.0122, add another 30% to the position. Finally, if the price reaches $0.0125, add the remaining 30% to maximize gains. This layered entry approach mitigates risk and allows for increased exposure during favorable price movements. This portfolio combines technical indicators and price action analysis for a robust and potentially high-return investment strategy. Based on the historical data and forecast, Sonic has shown a downtrend from September 17, 2025, to September 30, 2025, with the RSI consistently below 50 and the forecast indicating continued decline. The support price remains stable at $0.23, while the resistance is at $0.297. Considering the RSI is currently in the oversold territory, a contrarian strategy focusing on short-term bounces is advisable. I recommend a strategy that combines RSI and Bollinger Band signals. The entry price should be $0.234, coinciding with a touch of the lower Bollinger Band and an oversold RSI reading. The stop loss should be set at $0.245 to protect against further downside. The target price is $0.253, aiming to capture a rebound towards the middle of the Bollinger Bands. To optimize the portfolio, I suggest a weighted average of the three strategies. Given the strong downtrend, a 60% weighting should be allocated to the RSI-based bounce strategy. A 30% weighting can be assigned to a strategy that looks for opportunities when the price touches the support level of $0.23, with an entry price of $0.23, a stop loss of $0.22, and a target price of $0.25. The remaining 10% can be allocated to a strategy that aims to profit from a potential bounce off the lower Bollinger Band, with an entry price of $0.215, a stop loss of $0.225, and a target price of $0.24. This diversified approach mitigates risk and maximizes potential returns by capitalizing on various market conditions. Based on the historical data and forecast, Zcash exhibits a strong upward trend. The price has consistently broken through resistance levels, and the forecast for the next week predicts continued growth, reaching $87.1. The RSI consistently moves above 60, indicating bullish momentum. Combining these factors, I recommend a long position strategy. We will enter a long position at $70.4 with a stop-loss order at $67.8, just below the support price. The initial target price will be $77.3, the previous resistance level. To refine the strategy, we will incorporate the Bollinger Bands. The center band is consistently rising, confirming the uptrend. If the price touches the upper Bollinger Band, which is $83.1 on October 6, 2025, we will move the stop loss to the center band, $83.1. The final target price will be $87.1 based on the forecast. This strategy combines trend analysis, RSI signals, and Bollinger Band confirmations to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Aptos shows a slight upward trend with considerable volatility. The price has been fluctuating between the support price of $4.24 and the resistance price of $4.62. The RSI indicates periods of oversold and overbought conditions, with recent values trending upward, suggesting increasing buying pressure. Considering the forecast for the next week, the price is expected to hover around $4.34 to $4.5. Therefore, I recommend a combined strategy utilizing RSI and Bollinger Bands to capitalize on short-term price movements. We will implement a three-tiered strategy. First, on October 7, 2025, when the RSI is below 40, enter a long position at $4.34. Set a stop loss at $4.24, just below the support level. The initial target price is $4.46, aligning with the upper Bollinger Band. If the price reaches $4.46, we will move the stop loss to the center of the Bollinger Band, which is $4.41. The second target price is $4.5 based on the forecast. If the price reaches $4.5, we will take partial profits and maintain a trailing stop loss just below the center of the Bollinger Band. This strategy aims to capture short-term gains while mitigating risk through dynamic stop loss adjustments. Based on the historical data and forecast, Starknet shows a volatile trend with recent upward momentum. The RSI has fluctuated between 37.8 and 61.7, indicating periods of both oversold and overbought conditions. The Bollinger Bands have also widened, suggesting increased volatility. Considering the forecast prices, which hover around $0.13 to $0.139, and the recent upward trend, I recommend a long position strategy. Entry price should be $0.13 plus $100, with a stop loss placed just below the bottom of the Bollinger Band at $0.112 plus $100. The initial target price will be the resistance level at $0.15 plus $100. To refine this strategy, we can incorporate RSI signals. When the RSI falls below 20, oversold, consider entering a long position. However, the recent RSI values have not reached this level. Instead, we can use the forecast data to guide our entry. If the price breaks above $0.133 plus $100 on October 4, 2025 Wednesday, enter a long position with a stop loss at $0.128 plus $100 and a target price at $0.142 plus $100. This strategy combines trend analysis, volatility assessment, and RSI confirmation for a balanced approach.